Hello and good evening, everyone. This is Charles Beaton here in beautiful Colorado Springs. I just want to make a quick short video and talk to you about myths when it comes to the VA loan, because you wouldn't believe how many times we get these common questions from our clients, and I just have to make a quick video. Myth number one, I can only use my VA loan one time. Absolutely false. I had a Navy veteran who had been in the Navy for 36 years. They were using their VA loan for the 9th time. Now, there are repercussions of using your VA loan more and more and more. Unless you have a 10% VA rating or more, your VA lending fee is going to get higher and higher every single time. So myth number one, busted. I can only use my VA loan once. Myth number two is there's a limit on the VA loan that I can use. For example, if you want to buy a $20 million house in Aspen, Colorado, can I use my VA loan on it? Yes, you absolutely can use your VA loan on it. Now, where you are limited to the conforming loan limits of your county, now the conforming loan limit here in El Paso County, Colorado is $832,750. That means that in the most technical sense, and of course over time, you could own 8 $100,000 homes and one $32,750,000 house. So that would be 9 properties, right? The second you own 2 or more properties, yes, you are limited to that that conforming loan limit, which is $832,000. Now, if you buy a house and you spend, let's say $1 million on it, and you sell that house, your loan limit goes back up to that $20+ million house. There is no limit, right? Now, if you keep that $1 million house, and let's say that you owe $300,000 on it, you've owned it for a really long time, you will have enough entitlement left over for another several $100,000 house. The third myth. So the first one was I can only use my VA loan one time. The second one was, hey, I have a limit on my VA loan, which yes and no. Number 3 is, hey, I can have a VA loan and buy it with my buddy. False. You have to have a marriage certificate for anybody on your VA loan. So if I am a soldier buying a house or a veteran and I am married, my spouse can absolutely be on the title of the house when using a VA loan. Now, if I want to have a buddy and we want to buy some hunting land, no, you cannot have your buddy on the title. And that will lead us right into our fourth myth, is that I can use a VA loan to buy land. False. You cannot use a VA loan to buy land. You have to get a specific land loan that does require typically 20% down is the lowest amount that I've seen. And then it's typically an ARM. So the fourth myth is I can use a VA loan for anything. No, you can only use a VA loan to get into a home. It's designed to get service members into homes with very little cost out of pocket, better rates, etc. So that is the fourth myth, is that I can use my VA loan for anything, which is not true. 5, I want to custom build a house, but I guess I can't use my VA loan. False. You absolutely can. There is a one-time custom home build loan product out there. Don't let anybody tell you something different. I've seen it. I've had a client use it. Now, there is a catch. You can only use it one time, and you basically have to do all of the legwork before submitting everything to the builder. What that means is if the property requires a septic, a well, literally anything, you have to get invoices and you have to get an entire cost analysis done. Or if you're going to have a builder build the house, you have to have the NATS details of what that's going to cost. You have to submit this all to a lender. They need to review it, and then they will either approve it or deny it. Of course, you have to get qualified like any other standard loan, but that is a myth. That there is no product out there, and I hear it so many times. If you want to custom home build a house on land, yes, you can absolutely use a VA loan product out there. It is called the VA construction loan, also known as an OTC. It is a one-time close. I could talk about myths all day, but we'll close here with a few left. The other myth that we see is VA loans take forever, which is absolutely false. This couldn't be more false. VA loans, the quickest one I've ever closed with a killer lender was 17 days. But on average, 21 days is too easy to close a VA loan. Anything over 30 days, there's a reason why, but typically 21 days. So VA loans do not take forever. Another myth is that sellers hate VA loans, which is not true. Now, there are some properties that are distressed that will not go through a VA appraisal, and it just won't work out really well. Now, with that being said, 9 times out of 10, sellers love when they see a VA loan. A lot of the times because they're veterans themselves. There's already a VA loan on the property here in Colorado Springs, that is. Now, it is a little bit less competitive than a full cash offer, right? Because you have to go through the appraisal. There might be appraisal conditions, but that is a myth that I always like to squash is, well, I have a VA loan, I'm not going to be competitive. That is not true. As long as a seller gets paid what they think they're going to get paid and on time, they don't care if it's cash, VA, FHA, they don't care. As long as they get their money and they get it on time. So crushing that myth that sellers hate VA loans, that is not true. Another myth about the VA loan is I have to have good credit to use it. That couldn't be further from the truth. Guess what? The VA loan, the VA doesn't require credit at all. You could have no credit score, which I've had clients buy a house with no credit score before. They were young, didn't have established credit. They were able to get into a house using a VA loan. So it does not matter what your credit is. Now, with that being said, full disclaimer, whatever lender you use is going to have a minimum credit requirement most likely. A common one that we see is 580 or higher is what a lender likes to see, which is going to lead us into another myth is that the VA is the one that gives you the money. That is not true at all. Whatever lender you go with is the one that gives you the money. They're the ones that fund it. They're the ones that give you the money. They're the ones that source the money. All the VA does is insure the loan, which I'm saying all they do. It's quite a bit because one, it gives you a more competitive rate. It allows you the ability to not put any money down. And it also is going to give you no PMI, which is primary mortgage insurance, which on a lot of loan products you have to have. When it comes to the VA loan, that's not a thing. But a common myth is the VA will give me the money. When I talk to first-time home buyers for the first time, like, well, the VA is going to let me use the VA loan, which is true, and they're going to give me, X amount of dollars. The VA approved me for $500,000 or some verbiage like that, which is not true. The lender that you use is going to be the one that gives you the money. The VA does not fund the loan. And another myth about the VA loan, the VA will not allow seller concessions. Absolutely false. The VA actually allows more seller concessions than a conventional loan. So the VA will allow you up to 4% in seller concessions, meaning if you buy a $500,000 house, they will allow the seller to give you $20,000 in seller concessions. If you buy a $400,000 house, the VA will allow your lender to utilize up to $16,000 in seller concessions. So that is something that I also want to bust as well. Now, conventional loans is 3%, but yes, absolutely a myth that we get is, can I get seller concessions using a VA loan? Yes, in fact, you can get the most. And another myth that we see all the time, I have to live in the house forever when using my VA loan. Absolutely false. Now, the VA does require this to be your primary residence when you're buying the house, but you don't have to live in it forever. If you have intent to live in the house and you live in it for a few months and then you get orders and you have to PCS or you have to move for whatever reason, you can move. And then you can rent the house out. You can do whatever. The VA does like to see occupancy for a few years before you buy another house. Now, for example, like myself, we moved here in 2018. We used a VA loan to buy a house. We lived in that house for a few years. And then we used another VA loan to purchase the house that we're in now. Now, my wife and I were dual military, so that was a little bit different scenario. But going back to what we talked about earlier, the conforming loan limit, if you buy a $300,000 house when you first move here and you live in it for a few years, you start growing, your family grows, you get married, you start having kids, and that house doesn't work for you, you can keep that house, rent it out, and you can buy another house. Since you only spent $300,000 on your first house, you still have $530,000 left over of VA entitlement. So you can go and buy a $500,000 house with $0 out of pocket. In another myth, oh my gosh, there's so many myths about the VA loan. Let's get into the next one. I am self-employed. I am not a W-2 guy. I can't use a VA loan. Absolutely false. Now, it does take 2 years of tax returns if you're self-employed to see what your profit and loss statements look like, to see what you're paying yourself, to see what your W-2s look like if you're paying yourself that way, or if you're a 1099 type person, they want to see 2 years of tax returns. So yes, you can use a VA loan if you are self-employed as long as you have the tax data. Now, if you just started a new company and you're self-employed and you started a month ago, yes, unfortunately, you're not going to be using that income no matter how much money you make to get qualified for a VA loan because they will not count that income. The last myth that we're going to talk about is I can't use my VA loan on a townhome or a condo. That is not true. As long as the complex is approved by the Veterans Administration, like they're an approved builder or an approved complex, you can absolutely use your VA loan to purchase a house pretty much anywhere. Doesn't matter if it's a high-rise condo in Florida, in Miami, or if it's a condo up in Breckenridge, you can use your VA loan as long as it is an approved complex or builder by the VA. Now, let's roll into something else that a lot of people don't understand. The VA loan is one of the best loan products out there. Now, when it comes to the VA approval process, residual income matters more than your debt to income ratio. VA loans are assumable no matter what. At least I've never seen a VA loan. Doesn't matter if it's 15 years old, 20 years old, 30 years old, it is always assumable. Disabled vets may pay a $0 funding fee. Now, when I say disabled vets, 10% of a VA rating or more waives the entire VA lending fee, and that can be a huge savings. Let's say that you're a veteran, you have a 20% VA rating, you're buying a $2 million house, you are saving a ton of money on that VA lending fee. Now, if you're a veteran and you're using your VA loan for the 10th time and you are in the process of getting out of the military and you don't have a VA rating yet, that VA lending fee is going to be huge. The only way to get that off is refinancing, which is going to roll into my next fact, is that VA refinances are often much cheaper than conventional refis. There is a great program out there. It's called a VA IRRL. They call it the EARL. It is a streamlined refinance process. Now you have to break even within 2 years. And what does that mean? Let's say I refinance, I'm going to save $250 per month, right? That's $3,000 a year. The most that the lender can charge you is $6,000 because you have to break even within 2 years. The VA refinance program is second to none. I am a huge fan of it. I've used it a few times myself. Now, another fact is VA buyers often qualify for more house safety, not less, which is true. When you're going through the buying process, you have a VA appraisal. They're a little bit more strict, and I will tell you that VA appraisers are kind of like Ranger School instructors. Don't hate me for this, but they're pretty subjective. I have had appraisals come in really low, and then 2 weeks later, another appraiser walks through the door who's a VA appraiser and appraises the house $100,000 higher. So VA appraisals can be subjective. However, you're going to get a little bit more stringent. Sometimes you're going to have more house repairs required when using a VA loan versus a conventional. The conventional appraiser is not going to care about the deck that is totally rotted, paint peeling up. The VA appraiser probably will. They're going to say, hey, this thing needs to be scraped, sanded, whatever, power washed, and repainted. So you're going to see that quite a bit. Now, I hope that this video helped you. If there's any other myths that I may have missed, let me know. Put it in the comments. I put videos out every single week. I am constantly learning in this job. I've sold hundreds of homes, most of those to VA buyers, and I'm still learning every day. So if I missed anything, send me a message, send me an email, put it in the comments below, like and subscribe. Like I said, we put these videos out weekly, and we're here to help buyers make decisions, save money, and not make costly mistakes. I am Charles Beaton here with Beaton Brothers Property Experts. Thank you so much for watching.